how we can help a client with their planning and really step up our abilities as professionals and be the advisors that our clients really need. It's one of those in this world of planning, we have to really look at what our purpose is. And, I think our purpose is to help individuals and business owners grow access and protect their wealth, and really you do it in the most tax advantaged way possible. Anytime I get into the planning process, really the primary focus we have to have is what is our client's goals. We need to know what they want us to accomplish, and so we really sometimes have to really pull that out of our clients and walk them through that part of the process so that we can really help them understand what their goals are, but have it set up so us as the planners can really focus our planning strategies in the best way possible to help them meet what their goals are going to be. If you look at all of the different tools that we have in the advanced planning market to help our clients, it really can be an exhausting list. But what we have to understand is, as planners, we need to know how to use these tools. We also need to know how these tools can interrelate and really take the best advantage of the different tools available. But at the end of the day, we've got to stop and remember, these are all just tools in a toolbox. We need to know what they are and how to use them so that we can help our clients. I had a chance to be in a meeting a few weeks ago, and I kind of got carried away in the meeting. I got talking about estate taxes and income taxes. And as we went through, the client was just wanting to know more of from a starting point, what type of a plan I could put together for him. And boy, I just got going and talking about using different kinds of trust and how we can put different provisions in each of the trusts to help their kids and grandkids, and then making sure we had access for husband and wife. And I really got going on this plan, and the client was kind of liking what I was hearing, what I was saying, but at the same time, I could see on his face it was starting to get confusing. And really, it wasn't until I was out of the meeting and I said, let me take a week or so to put the plan together, that I stopped and took a step back and realized I was overcomplicating the solution to the client's problem. When I realized how, what the client's goals are and what we were trying to accomplish here, I realized I could accomplish everything the client wanted with a limited liability company and a new life insurance policy. That's all they needed. It wasn't this complicated, let's use multiple trusts and really show them all of what we can do. It's let's solve the problem and help the client understand what's best for them at that point in time. And since I had the time to step back and put that together for the client, I had the follow-up meeting with the client, and I said, after all of these things, here's what you need. Client loved it, understood it. The plan's being implemented as we speak. So we can't get ahead of ourselves in the planning process. And remember, the simple approach is probably the right approach. But there again, keeping in mind what the client wants. Today, I kind of want to walk through this looking at, if we have a client that their goal is to really have a successful retirement, how would we approach this from a planning perspective? And if you think about it, when we're looking at the planning for retirement, it's not only planning to get to retirement, but how are we going to come down the other side of the mountain and use up those assets in retirement the best way possible? And so we have to look at not only the client's goals, but the next thing is to look at what's the time frame, both to build the plan up and to utilize those assets in retirement. As you're going through this planning process, you need to look and see what are the threats that are going to affect this plan and what would keep the client from obtaining their goals. If you look at a successful retirement, we have to manage the income taxes. What happens is if there's a care cost where the client needs to go into a long-term care situation, assisted living, other health-related issues? What if there's an early death by one spouse? How's the other spouse going to be protected? And of course, we have inflation and investment risks in the assets themselves. We need to be asking ourselves, as we're putting this plan together, what tools can we bring to bear that can address each of these different threats that are going to affect our client and how they enjoy those retirement years and have the retirement that they're after. When you're going through and looking at those threats, now we reach into our toolbox. And this is where we want to make sure we understand what tools are available, whether that's the various types of qualified plans, whether that's using annuities, life insurance, whatever those tools are, that we know what we're pulling out and implementing for the best plan for our clients. As I look at life insurance, this is a great tool in the retirement plan because it's going to click off a lot of those different boxes that our client's going to have. If there's an early death of one spouse, then we're going to have liquidity or that death benefit paying into the estate to take care of the surviving spouse, children, grandchildren. Basically, it's going to help complete the plan for the survivors. If we have a client that needs to be using these assets in retirement, we can have cash value that can be accessed tax-free. And we're seeing a lot more of the plans, designed for this, specifically using life insurance because of its tax-free nature as really that Roth on steroids that allows our client to have access when they want it and they can use the asset how they need it. The other thing I like about life insurance as we get into today's world is having the living benefits that can help our long-term care and disability. As you look at it, we have a lot of ways to accelerate the death benefit, and I think that's something our clients, once they understand that we're accelerating the death benefit and not just the cash value that can be used to pay for that terminal illness, that chronic illness, those long-term care needs that are going to affect most, if not all of our clients. I know the statistics show the vast majority of us are going to have some kind of a health-related care need in our retirement years. And so how do we fund for that? Do we set aside assets? Do we leverage life insurance? Do we use a real long-term care policy or a long-term care rider? All of these are tools in the toolbox, there again, that are being used to help our client meet their goals. So as you're going back through this, in the planning process and really to set ourselves apart from other advisors in the marketplace is we, number one, need to help our clients understand their goals, and we have to understand our clients' goals because this plan is going to be designed specific to them. As you're going through helping the client develop this plan, ask yourself, what are the specific threats that would derail this plan, that would keep the client from achieving the goals that they've set out? And then finally, reaching into the toolbox and pulling out the tools, whether it's one tool or multiple tools, that specifically can meet the client's needs, help them achieve their goals, and reduce or eliminate the threats to their retirement plan in this situation. So as you go through this planning process, we're going to talk about this a lot throughout the year of how we can use all these different tools in a way that are going to help our clients. I appreciate everybody taking the time to get on today. And if you have questions, please feel free to reach out on LinkedIn and we can talk about those.